This is my end of 2024 update video. I have slacked a little bit in journaling, at least for the YouTube side of things, and I've not uploaded since September, it looks like. So that's a discipline thing that I will need to work on. Not that I haven't been journaling separately. I've been doing quite a bit of that. My girlfriend is a doll, and she listens to me when things are going good, when they're not going so good. So she's been kind of my main outlet for journaling, aside from the technical stuff that I do on a daily and weekly basis. But to kind of pick up where I left off, when I was, the last video I made, I was working on trying to pass an evaluation. My main goal for 2024 was to pass an evaluation and have taken a payout of any size by the end of 2024. And today is December 30th, so tomorrow's the last day of the month. And I have failed twice. So I failed that attempt that I was working on, had a reset, and then recently just failed that second one. So the way I've been approaching that is Top Step, who I'm using for the evaluation, they do a reset on rebill. So I fail, and then basically when the subscription renewal time comes every month, there's an option for them. When you pay your bill, they just reset the account if it's failed. If it meets certain criteria, I think you have to have failed it within or more than 24 hours prior to the rebuild date. And then I had to reach out and get in touch with them because it was a couple of days after the first reset that it hadn't reset on the rebill. So I just reached out to them, and they took care of it. So that was unfortunate. This will probably be kind of a winding, meandering mess. Got kind of a lot to get through. There might be a couple of technical things that I bring up at some point, but I have a lot to kind of cover since my last video that I want to make sure is documented. So the failing of the 2 evaluations was kind of the big thing, the big stumbling blocks. Things have just not been going well, so there's been a lot of frustration. It was going really well for the first 2 or 3 months of joining the group that I'm a part of, the study group, and then not entirely sure what happened. I think there's a couple of things going on. There was definitely an aspect of the kind of the phenomenon where you say a word so many times it stops becoming a word. I just completely forgot what I was looking at and was just kind of going in circles. So I've taken little stints of time off to kind of just reset, get my head straight, work on projects out in the garage or whatever. But for the most part, I've been pretty well on it, even though I haven't been documenting everything as thoroughly as I should. I'm involved in the study group chat every day and looking at the charts pretty much every day, back testing and studying in the evenings and weekends, with the exceptions of the day or 2 off that I've taken here and there. It's been the holiday season here the past couple of weeks, so I have taken a little bit more time off just because of all of the events going on and kind of slow movement in the market anyway. But since failing, there's been positives for sure. I had a couple of really good trades last week. I'll probably bring up a couple of the couple of those here in a little bit, but I've been, I finished the 2022 mentorship for the second time around just now, literally right before I started recording. Finished video 41, so that's my second full watch through of that. And then I've also started the Market Maker Primer course for Forex. The group that I'm a part of, the leadership group, has a really nice document put together of kind of the recommended path and sequence to go through all of the ICT content, as well as the study hall videos that we do privately. So when I first joined the group, there was kind of a lot of emphasis on doing the 2022 mentorship, because prior to me getting there, a lot of the members were kind of having, from my understanding, having issues with entries and some of the things that the 2022 mentorship focuses on. So when I joined the group, that was kind of the main talk of the town. So I kind of misunderstood, deviated, maybe was a little bit stubborn, and focused pretty well solely on the 2022 and the associated study hall videos that we have. So since then, I have made it a priority, and it's been kind of pointed out to me that I need to go back and focus on working through the document and the process that that's been suggested to go through. So the Market Maker Primer course for Forex is the first series on that's recommended. Baby Pips, I guess, is kind of the first thing that is recommended. That's for absolute beginners who have never traded before, and that obviously focuses more on Forex, which I'm not focusing on. So I have elected, and this could change, but I've elected to skip that. Probably for right now, I might go back through it just because I'm not focusing on Forex. But going through it, I have kind of started looking at Forex, not taking really any trades. I did take one trade last week in the Aussie dollar. That'll kind of tie into another point that I hope I meander to at some point. But anyway, I'm working through the Market Maker Primer course, and that has been very helpful. I think that has been filling in some of the missing gaps as far as the things I'm struggling with, like bias and just kind of the overall draws on liquidity. Where is price likely to go? Where should I be focusing? So that's been already helpful, and I think I'm on the 10th video of that. So that has already been yielding some good results and kind of bolstering my confidence. So I'm continuing to work through that. And then the group also has a spreadsheet of our study hall videos and the things that pertain to them. There's kind of 2 separate spreadsheets. One is just the full catalog of them, what the order is, kind of just a quick description of what they are, how long they are, things like that. And then the other one is focusing primarily on time and price, which is another thing I'm struggling with, kind of correlating during the key times of the day. So that's another point of focus for me. So I've been going through those as well. So that'll be kind of my plan for the new year, is to just continue on through the document and all of the ICT content that we should be going through in order. And then I may or may not go through baby pips, just because that leads me to the point that I was hoping to meander to, is one of the issues that I think I've been having. There are several, I think, that I've identified, but one of them is just my day job, especially the past few months. End of the year wrap up has been pretty intense, so that's been taking a lot of my focus away from doing things well in the chart. So I've been kind of bringing that up in the group. I brought it up once, and the leader told me to maybe try doing an afternoon session silver bullet trade. So I have been working that in. I've had a couple of really good solid trades with that. And then in addition to that, going through the Market Maker Primer course for Forex, that was kind of a point in the first few videos, is people with 9 to 5s, Forex, and particularly pairs that aren't tied to the dollar, can be pretty active when we aren't working in the States, obviously. So I have been looking at that, and so like I said, I did take one decent trade the other night and got nothing major. I think it was 10 pips on the Aussie dollar. So if I'm going to continue doing that, I definitely need to go back and work on the baby pips and kind of get my footing as far as Forex. And then I've been trading the Asia session as well, because that's kind of right at the end of my workday into about 10 o'clock at night for me, which is, the time that most of us would normally be sitting in front of the TV, watching TV, which I do occasionally. But that has been working out pretty well. I took a couple of trades during London. I was up for a couple of days pulling all-nighters for work, so my team's messaging was quiet, emails were quiet, so I was able to kind of take a couple minutes from work at key times that I knew would be happening to look at the London session. So I got a couple of really good trades there. Let's see. One of the other things that I've been trying to work on is the AMDX Power of 3 concepts. There's a couple of people in the group who have really been spending time on that, and they say it's pretty well changed the game for them. So I'm struggling with it a little bit. I've got the main idea down as far as what days and what times can be what. Monday through Thursday, Monday can either be X or an A, and then that fills in the rest of the week. But I think my engineer brain likes solid black and white. I'm used to math problems where there's one right answer, or a couple of right answers that fall within some range. But anyway, a defined correct answer. And with the AMDX stuff, it seems, well, and just trading in general, it seems that you have to be a little more flexible than I tend to be. So it was this one here. So this was my markup for it. Let's see, I gotta refresh myself. So we had displacement somewhere. I've been changing up my chart style too, so I can kind of focus on what I need to be focusing on. One of the other problems I've been having is getting too wrapped up in the lower time frames. So I have it set up to where the lower time frames are small panes, and I usually have this kind of minimized, and then I have my notes over to the side the way I had them here. This is usually how I'll have things open, and then my trade tracker's off to the side. So all the higher time frame stuff is in the big quadrants, and then in the final quadrant, that's split for the two basically entry time frames. So these aren't kind of the main things I'm looking at. It's a little bit messy I'm working on cleaning that up, but for right now, it's helpful to just kind of have everything, see where the big end wogs and end dogs and daily fair value gaps are and things like that. So, so I've got to kind of get past the mess and the clutter here. But so there was a small market structure shift on the lower time frames. That was bouncing off of, I think, a 15-minute fair value gap. Yeah, this one right here. It was bouncing off of this. It did it pretty cleanly, pretty abruptly, right after it took out sell side. So I was pretty confident just from right there. There was the fib. So we were trying to get back into a premium from discount. So I was pretty confident in that. We bounced off of a daily order block just prior to that. So we had kind of some upward velocity to get back up into a premium. So I had those two confluences. So I did enter right after I saw this order block be confirmed. That was my entry for 2 micros. My target was the consequent encroachment of a 15-minute bearish fair value gap. And there was buy side liquidity right below that, so I figured that was a really good place to focus on, and it did end up going there. Unfortunately, as soon as we got above, I was going to take a partial at some level. I think it was the I'm trying to remember. I took a partial prior to my target, and unfortunately I bungled the order and I exited the entire trade a little early. You can see right here, but it did ultimately really cleanly. Just it went straight up, tapped it, and then kind of reversed. So I was really happy with that. That was kind of after a tough couple of weeks. So that was a good little confidence booster. It ended up being, I don't remember the risk to reward, 1.3 something, I think, which was decent. I'll take that. If I could have this kind of a low stress, decent R trade, even once a week, that would do me just fine. And I could easily pass an evaluation with that. So that was a good confidence booster. Needed that. Felt good about it. I put that in the chat and got some positive feedback on it. So that was good. So a couple of the other concepts, I have a bunch of sticky notes on my desk of, when I'm watching through ICT videos, or if I'm watching the group chat or going through a study hall, whatever it is, if there's a big thing that jumps out, I write it down. So I had to do a lot of reflecting on where I'm going wrong. And I've arrived at being a contrarian, and I'm kind of it seems that I'm a perma bear. I'm always looking for bearish entries, and I kind of take the idea of there's kind of the ICT mantra of buy when everybody's selling and sell when everybody else is buying, and I've taken that too far, and I forget a lot of the context within that. So I've had to really work on just really identifying the institutional order flow. Are we actually bearish? Are we actually bullish? And then really focusing on sitting on my hands if I'm seeing something contrarian and I'm trying to pick a top or a bottom. I that's killing me. So I'm really trying to cut that out of my habits, and I think I'm doing okay. Like I said, this was a long entry where I probably would normally be looking for shorts. So that was good. Looking for draws on liquidity is still kind of an issue for me, but I think I'm getting better at it. I'm seeing a little bit of progress. One of the concepts that I think I've latched onto pretty well is the Friday Asian range, because that seems to have pretty clear defined rules. Monday, no red folder news, go back to the last Thursday and use that range from the Asian range. So I've written not an indicator necessarily, but I have written just a tool that plots out those standard deviations for me. This one is someone else's that's just kind of helpful to see the levels. But I have this that I've written, and I can dial in the time that I'm looking for. So for this week, I would do the Sunday, and then I can turn on the Friday Asian range, and then that will go back and grab, because this Monday was no red folder news on Monday, so this is a valid week. So it just goes back and grabs the range of the Asian session, and then plots the 5 standard deviations up, and then I can put my my target there, and then turn it back off, just so I have the nice levels there. There's also the weekly and 6-hour and 90-minute AMDX sessions that I have also. Why is it not on? There we go. I turned it off. So I'll turn the Friday Asian range off. So I've got just the last Thursday, so I can see. Looks like this one was maybe a X reversal, if I were to guess. Maybe a distribution. I still need to work on it a little bit and get a little more confident with it. But then the Sunday open, CME open for the week, and then each day is separated. I've been relying on this more loosely than I have been, because of the quantization. This gives the really distinct time periods that all of this should be happening in, but it should be going a little bit more fluidly than that. So I haven't been using this function as much as I used to, but it's still nice to have, just to kind of go back. At the end of each week, I'll go back and do my analysis for that week. And this is another point where I need to be more diligent about it. But I'll go back at the end of the week and mark out my AMDX for that week. And then beginning of each week, Sunday night, Monday morning, somewhere around there, I'll go in and grab all of the news for orange and red folder news. And I think I've been kind of, when I grab it, my brain says, okay, we got it, that's good. But I need to internalize these key times a little bit better, and refer back to this. It's kind of like I just grab it, dump it here, and that's it. But so I've been trying to, like every morning, what do we have today? What might be going on? And that ties into my trade plan too, because I don't trade NFP or FOMC. So I need to be looking at this anyway, just to determine which days I should and shouldn't be trading, so I don't break my trade plan. But I have that here, and then I go through, like I said, and do my best guess of analysis, and then things that come up throughout the day that are either good trades or points of study, whatever it might be. So I've also been so in the Market Maker Primer course for Forex, ICT was mentioning kind of an SMT style analysis that he'll do when he just kind of as a baseline, but then if he's struggling with a bias for the day in whatever he's trading, he might go through and look at different Forex pairs and then kind of use those as a risk on, risk off tool to see, if euro dollar or the yen is doing something, then whatever, or if the dollar index is looking like it's going to do something, then he'll use that as a confluence to hone in on his bias for whatever it is he might be trading. So I've been kind of getting into the habit of grabbing everything, because I'll usually go into the Forex Factory and just grab the whole week and then filter down to US only red and orange folder news. But I've been just kind of doing double now, so that I have all orange and red folder news. So if I'm struggling, then I can do the same thing and open up. I'm still getting the hang of this and kind of what I should be looking for, because he was mentioning pairs that are not anchored to the US dollar, and then pairs that are. So I think for this, it's more useful to be using the US pairs, the crosses, I think he calls them, to zone in on that. So I have these up and ready to use for that if I'm particularly struggling with bias for a day. So that's been a change to my strategy. Let's see. Other sticky notes that I have are one of them that came from a study hall session group meeting that we do, is that wicks are good draws on liquidity and points to focus on. There was one example, one of the gals in the group that is just absolutely killing it. She was commentating on, I think it was the gold. I think it was gold futures, and they were on the daily chart, and she said, "Oh, that wick, the consequent encroachment of that, it's going to come back down and touch that." So I was watching an old, going back through the catalog. So this was a year or two ago, and I thought, just for the heck of it, I'm going to go back in and look and see if it actually did that. And I mean, to the tick, not it got close, but to the tick, 7 weeks or 7 months, quite a ways down the road, it did exactly that. It came down, tapped it, and then kept going the other way. And that was a really cool aha moment for me, that A, this stuff is algorithmic, and B, that we can identify the tendencies of the algorithms. So that was a really cool aha moment, and a good, I'm kind of in the point where I'm looking for just little pieces of confidence to grab onto, because I'm struggling a little bit. So that was a really good, yes, this works, keep going, we'll get it. Fortunately, or maybe unfortunately, sometimes I am persistent, maybe to a fault, but one of my favorite sayings is, when the world's trying to chew you up and digest you or whatever, be built like corn. So I think I'm built like corn, and that's something that I'm thankful for, to be able to keep getting through this and just keep slogging through. So those little pieces of the aha moments are very valuable. So I have little pieces of that I document and grab onto. So next sticky note I have is just the daily AMD and session AMD. Make sure I'm focusing on that, and that member that's really doing fantastic, and who called the gold move, she is really good at using the AMDX and leveraging her calendar to know when she needs to be at the chart, and doesn't need to be just sitting there all day long watching it. So she'll kind of be quiet in the chat and then come back and, took my trade, my AMDX calendar told me this was the time to do it, and then she's grabbing hundreds of handles at a time on NASDAQ. And so that's where I need to get to at some point. She learned it really quickly, kind of out of necessity. So she really did it. It's impressive what she's doing. So I'm just hoping I can work towards that. And that's another, watching her is another one of those pieces of confidence that is priceless. Prior to joining this group, I was looking high and low on, I had all the apps that I was, networking apps. I was trying to find just a mentor that I could just talk to and follow and whatever, and be able to vent to. And it was lots of multi-level marketing and people that just wanted to fleece me for my money, because obviously they weren't making enough doing the actual trading, because they were trading retail, or they just weren't able to make it work. Whatever the case may be, it was really frustrating. So I'm just endlessly thankful for this group that I have all of that with no expectations of me other than just showing up and putting the work in, which I've got on, I've got that covered. So as far as I'm concerned, it's just a matter of when, and just stick with it, keep doing it, keep finding the little nuggets of inspiration, and it'll happen at some point. I made a joke in one of our previous study hall sessions that the leader of the group made a comment that it takes a different amount of time for everybody to become consistently profitable. Some people it's a year, some people it's 10 years, whatever. So I commented and said, I was kind of wallowing in it. I was really having a rough time that week. So I said that I'm probably, my luck, going to be one of those 10-year people, because the 4-year degree that I took was the best 7 years of my life. So that was kind of a sarcastic way to agonize or something, but it got a couple of laughs, I guess. But I'm in it. I'm doing it. This is it. I have a small, I guess you would call it a business, that I started up a couple of years ago because I've been chasing the retire early, be able to get out of the rat race idea for, I don't know, 5, 6, 7 years. So a couple of years ago, one of my attempts was starting up a Amazon business. I sell through eBay and I have a website and all of that, but I forgot where I was going with this. I'm not business minded. I've had to come to terms with that. I think that's just not where my brain is. All the networking and marketing and all that, I don't do that very well. My brain doesn't work that way, and I don't have the funds to pay someone who is good at doing that. So this is a lot more my style, I think, even if it does require some fluidity that I don't have. I can learn to be that way. I think the analysis and the documenting and all of this, the spreadsheets and logging and analysis, that is definitely more suited to my neurological structure and personality, I think. So this is it. I'm excited to be doing it. I love the process, which is important. So like I said, my thinking is it's when and not if. I'm getting there slowly but surely. There are other people in my circle that are doing it with stunning success. So even if I could get to 10, 25% of what they're doing, I'll be there, I think. And then it's just a matter of keeping at it and never stop learning, which is another, I think, one of my strong points. I'm a student of life. I kind of overwhelm myself with how much I try to learn and take on. So I've got that going for me. Again, that could be a persistence thing where it might be overkill and to a fault, but I think it'll work well for me here. I'm absolutely willing to put in what it takes, and so it's going to happen. I'm manifesting that. I'm putting it out there, so I know I can do it. But anyway, next sticky note is to internalize the midnight opening price and the 8:30 opening price throughout the whole day, and just kind of keep that in the, not even the back of my head, in the front of my head, because that's an important concept for Power of 3, which I've, again, I understand the concept of it, but my brain kind of struggles with if it opens here, dips down, it could still go up, make it look like the candle is forming up and then come down. That's the high of the day, where it looked like the initial swing down was going to be the low of the day. There's still weird stuff that happens. It's not a hard and fast thing, which again I struggle with. So I've been focusing on trying to identify that a little bit better. I've got this nice indicator here to help with that, just to keep that in mind. So this one's a weekly candle, and then I usually have the daily candle over here on my 15-minute chart to keep both of those in mind. So I've had some good successes with those. I don't think, it was. I did use that here in this trade successfully. That was another point of this one, where it opened, and initially went above the true week open, and then it dipped back down below the CME open on Sunday night, and then went back down below the 8:30. So I was in below the week open and the 8:30 open, and I used that, I think, pretty successfully. So working that into my strategy and my approach. Next one is using London to determine how the New York session should go. So this was another thing that I have notes when I'm going through things. I use a little note symbol to identify recurring themes, things that pop up in different videos of a series, or even better, different series. You know, in the 2022 versus the market maker, there's a recurring theme here, or even better than that in those two in ICT concepts, and then something that comes up in a group study hall externally, you know. So I have these noted, and that's one of the things that has been coming up, is to look at London, look at what it's doing, how it's behaving, and then you can use that as a deer sign to kind of identify what the New York session might be likely to do. So that's one of the things I'm trying to focus on. The way that I have it in my head now and in my notes, I think, is if it's a quiet London session, you can expect with some level of certainty that the New York, at least AM, I think, will be a trending session. And then conversely, or inversely, if it's a trending London session, a big range, then you can expect at least the first half of the New York session to be pretty quiet and rangy. And that probably, I think it does tie into the AMDX somehow. So if London is quiet, then that might be accumulation and then manipulation somewhere in there, maybe at like the 8:30 or the 9:30 equity open Judas swing, and then trending for the rest of the AM, and then in reverse the other way around. So I'm trying to be better at looking at that. And then the last sticky note I've already mentioned, that was kind of ICT's thing of using Forex and related assets as the smart money tool technique, and combining that with the high impact news drivers in the morning. So this goes back to what I was mentioning, where I kind of grab this, dump it, and then don't look at it again basically the rest of the week. So kind of combining that and using that with the with other assets, and hopefully that yields some results. So those are the big sticky notes that I have right now. I'm kind of always adding and losing them or whatever, but those are the main ones that I've had for a little while. Let's see. I think that is the majority of what has happened. A lot of it, like I've said, has kind of just been not doom and despair, but it's been a little discouraging to have been doing so well, and then just going into a period where, I mean, this account that I failed just now had like in the mid-teens of a batting average of wins to losses, whereas prior to that, the first time I failed, I was hitting high 40s to low 60s percentage wise, but then my losses, I would kind of creep my stop loss, you know, as it was going against me, and then I would end up just wiping out any previous trades that I had won, so I would end up losing out on all of that. So now it's kind of gone the opposite, where I've had some really good risk to reward. I've had really good risk to reward going on in my trades. Maybe not really good, but I've had a couple of them, 3, 4, 5 to 1. But then my batting average, I've forgotten what I'm seeing. I don't know if it's I've forgotten what I'm seeing. I think it's more of I'm trying to pick tops and pick bottoms. because recently, I mean, we've been just making all-time high after all-time high, and that part of my brain says, okay, we've done that, we've taken buy side, time to go back down, and that's not been the case. So that's, I think, really the big thing, because like if I could get back to the 40 to 50% batting average with the win losses that I've been having recently, we're going to be good. That's it. I'll be on my way to at least having the account balance go up relatively consistently. So right now I'm focusing mainly, solely on paper trading and just kind of studying and watching. I had this up to 50,800 recently, and then it went down to 50,300. Then it went back down to 50,300, and then I wiped it all out in in one trade. So that was disappointing. Here's kind of where we've been. So end of October, I've kind of been just hovering around break even. But end of October, dipped down a little bit, and then I worked my way up with relative, I did pretty good for a while, made it up good, and then boom, had a big boy right there, and then got back up, and then another big one. So I need to work on weeding these out, because I mean this right here, this is a poor discipline decision. I've been trading one unit, and then I'm just going to gamble and then lose my ass on that. So my strategy for quite some time that I was doing pretty well at, and it made the first evaluation last for, 4 months, 5 months, I think, where I would start out 1 micro. And then if I had a profitable week, then I would go up to 2 micros. And then if I had another profitable week, go up to 3. And then if I had that next week be a not profitable week, then I would stay. And then if I had another not profitable week, then I would dial it back down to 2. So that was working pretty well, but it would be... so this was when I was having the decent, above coin flip odds win-loss ratio. But then I would lose my ass on one trade and just wipe out everything. And that was it. I have to be careful of the markets out to get me mentality, but it was like every time, so I would have a really good string of trades throughout the week on 2 micros, and then have a good profitable week. And then that next week, okay, we're ready to go to 3 micros. And then the first trade on 3 micros would be a loser, and it would wipe out the previous week. So that tells me I'm going way too fast in trying to dial up the amount of contracts that I'm trading. So this was another reminder right here. I was doing 1, maybe 2, and then 3 just knocked me out. I had the trailing stop loss syndrome there. So these are really easy things to correct. So when the account for my evaluation resets, it resets on either the 11th or the 14th of January. So I still have 2 weeks to just study, paper trade, just, take it easy and get back into a good mindset. And then once that happens, I'm going to adjust my risk management to a percentage base, which is what it probably should be anyway. So I haven't decided if I'm going to be using the quote unquote full balance of the evaluation. I don't think so. That's too aggressive to be even doing 1%, risking $500 per trade with a $2,000 drawdown. That's not going to work. So I'll probably just do either some percentage of the quote unquote I guess the actual balance that you have to work with a $50,000 account, which is $2,000, right? If you lose 2,000, it's over. You don't actually have 50,000 to work with. That's just the amount of leverage that you have access to. So I think that will be my plan. I'm still going to have to adjust my trade plan to address that issue of trying to creep up too quickly. and then blowing myself out on one trade. Let's see, where is my study plan or my trade plan? I want to bring this up real quick. Right here. So I don't think I've showed my trading plan before. I'll do that now just for the heck of it. So I've gone through a couple of revisions already. I have Rev 4 printed out, and that sits on my desk in a nice folder that I have access to easily in a tangible format. And this is another discipline thing where I need to work on being better at utilizing it. And when I see a trade form, it's like, I think the lower time frame stuff that I've been trying, the entry is really tight and I'm kind of in a hurry, and so I don't grab it. So I need to address that and use the trade plan that I've put effort into. So I have a reference sheet of different kill zones and times and things like that, and PD arrays that we use. That's a blank page that I need to take out. And then I have this one in the kind of the inside cover, so I can get to it quickly. So if just for an example, if I were doing a 1% of the full account on paper size of 50,000, so that would be 500. How many micros at one time can I trade? So then I could just find 500. Oh, I know I can, and then my stop is probably going to be, I don't know, 20 points, whatever it is. So that's 400, somewhere between 10 and 25. So I would just probably stick to 10 because that's close enough without risking all of it. So I have this to kind of reference quickly. And then I have a bunch of calculators in my spreadsheet as well that I can refer to dial in the trade management and the money management, the risk, which I have gotten lazy about. So that's another thing that I'm going to need to make a New Year's resolution out of. Here's my goals. So I was shooting for 2% net profit per week, 60%. This is aggressive, but I was hitting this at one point. This was kind of the problem area with that first one, and then it kind of flipped. And then I'm going to need to update this. I'm not entirely sure what I want to shoot for. My initial thinking is that I joined the group and started studying ICT at the end of May, so we'll just call it beginning of June of 2024. So if I set that as my new date for this, I think that would be both, kind of symbolic and reasonable to have done this by a full year of I've been, I think, pretty diligently studying this. So 1 year of diligent study of, the right concepts to meet that goal. I think that would be a good goal. So that's my plan right now, but that could change. I have the models that I kind of have myself allowed to trade. So right now, obviously the 2022 is the main one. That's the one I've watched through the most at this point. Silver Bullet is now a regular in the roster. I have another indicator that I've written that I'll use the 5 for this. It's kind of a similar thing. Pick a date, turn on which kill zone for the Silver Bullet I want to look at, and then it'll just plot some lines so that I can see at a glance that a kill zone is coming up, or it's close, or we've passed it, whatever. So this has been in regular rotation, so that is now here. The Friday Asian range, like I mentioned, I've been doing pretty well with that. The thing I'm struggling with the Friday Asian range is just which direction, which target is price going for? Are we going for the high or the low 5 sigma of that? So I think I'm getting better at that, and I'm using it more as a confluence to help in my bias. Like, we're closer to the high, for example, so that's probably the one that price is drawing to, or there's relative equal highs right here by the low of the, or by the high of the Friday Asian range, whatever it might be. That's kind of how I'm using it, not as like a standalone strategy, but it's definitely in the front of my mind. And then the TGIF strategy. This is another one that is kind of a power of 3 thing that makes sense to me. And I have a fib setting where I can draw my fib and then change it to the TGIF, and then that's the 20 to 30% retracement. So pretending that this is the daily range that we're looking at, I can draw it. If we're wandering around here at the New York Open or whatever it is, then I have some good targets, and then I use the Friday Asian range and other ideas as confluence for that. So I've had some good, I don't know if I've taken an actual trade with that strategy, but it's at the front of my thinking, and I am relying on that concept pretty regularly. There was one morning 2 weeks ago, maybe, where I was really frustrated at myself, and I had kind of an aha moment. Actually, this is a good thing to be bringing up, I think. So it was Friday. I was up at 4 or 5 a.m. my time, so it was well before the market opened, and I could kind of think. Work hadn't started going wild yet, so I was able to really just sit down and do some analysis pre-market. And I had it in my brain that I saw it. I sat down, saw it, it was right there. It was this Friday here. So we were bouncing off of this really obvious daily order block. There's this big fair value gap up here. There was all kinds of confluences that said, we are going up. It's bullish. Just look for your entry, get back down below the true day open, or, whatever it was. We're going long. And then the more I sat there and looked at it, the way I put it in the chat, because I was really frustrated at this. I put it in the chat that I have 2 levels of analysis. I have the first one, gut feelings. This is just what I'm seeing based on backtesting studying I've done. And then I have the second one that comes in louder after that one and says, but what if? And it started seeing all these stupid little 5-minute time frame PD arrays. Oh, there's a little thing here. What? Nope, we're going short. So then I put in my short entry and got stopped out for, I don't know, 10 handles. It wasn't a devastating loss, but I knew with those confluences and TGI Friday, we had gone down this entire week. We were going to be going back up to fill in the 20 to 30% retracement. I knew that. It was a no-brainer. And then I turned it into a not no-brainer. So that was really frustrating, but I needed that, I think, because now when I sit down, I'm really trying to just focus on what am I seeing first, boom, 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 and then that's it. That I try to not overthink it. I think I'm a textbook overthinker. If if it's not obvious already that I have a problem. So that's been a struggle, but now I'm conscious of it, and I'm frustrated about it. I'm mad. So watch out, stupid second analysis level. So that was a good realization. Anyway, that pertained to the TGIF strategy, because I knew that on last Friday and just didn't for whatever reason. So now the market maker model, the buy and sell model, I don't have enough to incorporate that fully. I need to do I just need to get through those sections in the ICT catalog, and then I need to do all the back testing and all the requisites to make this a valid strategy to trade. So here's the no trade days for me. Contract expiry Mondays with red folder, so it's either Monday I'm expecting reversal or continuation or accumulation, or TGIF if it's like a small Asian range, and then like a quiet London session, then I might be looking for a Friday Asian range, or at least using that as a draw. But Mondays with, those are no trade days for me. Fridays after lunch ish, and then NFP and FOMC, like I said. So if I have an evaluation running, I it's a hard no trading in the evaluation account. Or if I get to the point of having a cash account, obviously no trade, but then I'm allowing myself to conservatively, like 1 micro max, to take paper trades on some of these days. Like NFP, I still don't mess with that. FOMP, NFP and FOMC, don't mess with that. But like a Friday, if it's a PM session and I see something really good, then I might get in. It was kind of the same thing with that that Monday, this trade that I took during the lunch hour. I shouldn't be trading that. I don't think I have that actually written, so technically I didn't break my trading plan. But I shouldn't have been taking lunch trades just based on what ICT recommends. But I did. I paper traded that with one. Oh, well, actually, it was two micros. So 2 micros and a pretty conservative stop loss. So that was okay. I was okay with that. And then my risk parameters, just breaking it down by what kind of account it is. My loss limits, I think this probably needs to be moved down to 2. I'm going to change that right now because I've been having big oof moments with that. And then so that's a continuation of that. And then just my pre-trade planning, pre-week, pre-day, pre-market, whatever. I'm sticking to most of this. I think all of this is up to date and is printed in my plan here next to me. But now what's a better time to go through it than now to hammer it into my head? So AMDX, XAMD, that's a really pivotal cornerstone of my strategy that I need to be following, and I still am doing, I think, pretty well. I slacked on it a couple of these days, or these weeks. Like I didn't have my my usual analysis for that week. I'm kind of hesitant to show messages just in case people in the group aren't comfortable with that kind of thing being shared. So I might try to go in and edit those out. But so like this week, I grabbed the meetings, the news drivers beginning of the week, and then I just didn't do anything else. And this was one of the really rough weeks. So this is kind of the chicken or the egg. Did I have a bad week because I didn't journal as well as I should have, or did I not journal as well as I should have because I was frustrated? And it might be a combination of the two, but probably the former. Journaling and discipline obviously is the foundation of all of this. So I need to work on being more diligent about that. Obviously, I think if I wasn't working the 9 to 5, like the company I work for is global. So in the mornings is the afternoon for the headquarter office. So my mornings, everybody's kind of trying to wrap up their day in those offices. So it's really busy in the mornings. So if I didn't have the 9 to 5 and this was my job, I would be just more than happy to be doing all of this. But that makes it hard. I can make excuses. That's not what we're here for. Not a good thing to have, but I really do think, like, I enjoy doing all of this. So if I could just focus on this, I'd be having a blast. But this is the work that's required for now to get to that point. So that's kind of the thing for the weekly. Plot out the CME open, the Monday open, the true week open. I mean, try to figure out a bias for the week based on like the previous 3 weeks, highs and lows, and then look at the London session prior to Monday to figure out what Monday might look like, if it'll be an X or an A, and try to extrapolate that out to the best of my current abilities. And then each day do the same thing. This kind of overlaps. I think this is my I usually do this on Sunday nights, but if I haven't, then go in, get all the news drivers, check. If there's nothing for Monday, then mark out the Friday Asian range. Again, I usually do this Sunday night, but if I don't, then it's here. And then I have kind of the rules in the playbook that I'll go through for what that might entail. So it says if there is red folder, that's a no trade day as specified up in that section. If no, watch for the Friday Asian range to play out, blah, blah, blah. Sometimes occurs all on Monday. Okay, so that's just other details. So if it's not, expect a ranging consolidation day. So it'll either be X or an A. Just more rules. Generally avoid trading on Mondays unless expecting the Friday Asian range. That still kind of is my approach. I'm hesitant to trade on Mondays just because I don't know if it's an X or an A. Sometimes it's obvious, sometimes it's not, but I still try to just shoot for Tuesdays and Wednesdays and sometimes Thursdays and Fridays. So every day except Monday I'm a little more comfortable with. This is something I need to internalize a little bit more. I've done some back testing on this and I just haven't really seen this as much, maybe just because of, I don't know, the seasonal conditions or the fact that it's been kind of leading up to the holidays. I don't know, the volatility in the world, I'm not sure. But the Tuesday London has not, and just Londons in general have not been setting that extreme. It's possible I could be misunderstanding that. My understanding currently is that the London, actually the London proper session is kind of what sets the initial extreme for the low or the high, and then another one of the common themes from the Forex that I've seen in other places is that the lunch hour it coincides with the London close, so that's likely to set the opposite side of the daily range. But I've had trouble seeing that, so more back testing will be required there, I think. So blah blah blah. This is for each day. So for Tuesdays, look at Monday, fill out the this is the little chart that I have. This is my calendar that was kind of the homework assignment. So this is for the whole week. I have some functions in here that, like, was there Monday red folder? If yes, no trade. If there's not, then look for the Asian range, for Friday Asian range, and the accumulation is likely, so watch out for that. Then I have a section to go through and mark out exactly what the London range was. Was there manipulation during that time? Was the Friday Asian range completed? No. Then continue watching for it. Is there FOMC? No trade? Things like this. So this has been fairly useful, but I haven't relied on it as much as I should be. This is another one of those things that I try, being the operative word, I need to do better, but I'll try to go through at the end of the week, or like if I'm starting the beginning of the week and I clear it all out, to take a screenshot prior and put it into my weekly journal. But I need to do better at that. So that's what that is. Go through and start filling that out. This is basically all just prompts to fill out those little windows, those little input fields, and then it'll do the rest. So I've talked to some people about this work that I've done in writing these. I'm hesitant to call them indicators because it's not like a MACD, or a bear flag identifier or something like that, where it's just like, oh, get in, the indicator says to take the trade. It's just plotting lines that I normally would and just trying to automate it. So I don't think that that's a bad thing because right now my time is limited because of the job. I can only be in it for a little bit at a time during the really busy times of the New York session. So I want to spend as little time as I can doing all this menial marking out highs and lows and marking the Asian range, projecting 5 standard deviations, marking the CME open, plotting out all the silver bullet kill zones and this and that. So I'm just trying to automate that. That's all I'm doing. It doesn't take, a whole lot of time to go through and write this kind of thing. This is the silver bullet one, and a lot of this is just left over, but like it's it's a little bit of work, but I think it's worth it because I can put in a couple hours here on an evening, get something that draws out these lines, and then I don't have to draw those lines anymore, which can be time consuming to do every single day. So I think ultimately I'm saving myself time, and I'm going to continue doing it. Plus, one of the long-term goals within, I don't know, the next 3 to 5, 7 years, something like that, is to compile all of this once I've gotten good at manually trading, and then taking these code blocks that I'm writing that can identify this CME open or this time window, and then start compiling that into an algorithmic trading system of my own. I would really like to be able to have kind of an auxiliary system running, like overnight when I don't have time, or don't want to trade the London session, to have it kind of just sitting there watching for the London session and then taking a trade with a couple of micros, just something to fulfill that thing of Warren Buffett saying, if you don't find ways to make money while you sleep, you'll work till you die. So this is my way of aiming towards that. So it looks like one of the things I'm watching for might be setting up. So there might be a bonus trade execution in here somewhere. No, I'm busy. I'm gonna restrain myself for now. We're doing something else. So, basically just watching. I'm not gonna go through every day of this on the recording, but then here's my trade strategy playbook. So for each of the ones that I trade most frequently, I need to fill out the Friday Asian range, though, like I said, it's right now more of just a confluence tool for identifying draws on liquidity, and kind of just a way to understand what that Monday might be, and if it's a no trade day or not. So it's not a full strategy, and neither is the TGIF. Again, it's more of a confluence. So these are kind of the two that I mainly am trading right now. So this is just my workflow to go through these, which I don't use that much. I don't like how they're not written the way I want them to. They don't, the way that they're written doesn't really jive with the way I'm actually trading, I think. So this is another thing I'm going to have to figure out, probably how to optimize and how to make fit a little bit better into my approach. So I'm still, like, from a high level, I'm still going through this, for the most part, looking at the news every day. Like I said, I can still use some work in fine-tuning that and being more diligent about it, but on the whole, I'm doing that. At least the red folder thing, but then not really looking at what time things might be happening. And then I've been doing better about the TDA, top-down analysis, starting at the higher time frames and then trying to stop at the 15. And then if I start seeing the buy stop raids, or what stop raids and turtle soup, then start digging down. So I think I've been doing better about that. Like this really good trade that I took the other day, that was I saw that on the hourly, daily 15-minute first. So I'm doing better at that. I was really getting stuck down in the quicksand that is the lower time frames, and that was another one of those things where I'd see a 1 minute bullish or a 1 minute bearish market structure shift in an otherwise completely bullish day and say, oh, we're going down, and then it, surprise would just keep going higher and stop me out. So I really think I am on to identifying the little gremlins in my brain and doing what I can to quiet them down. And I think I'm optimistic that I will see some results from that. So that's kind of where I am right now. I'm on it. I'm going through it. Little tweaks and being diligent about incorporating the changes that I'm identifying as needing to happen. And it's just a one foot in front of the other situation. I've got really great support in that group that I'm in. My girlfriend is rooting for me all the way. She's so supportive, and she encourages me to spend time in the office, in the evenings and on weekends, to spend time on this, because she knows that this is important to me, and it will ultimately, in the long run, allow us to spend more time together if I can get to the point where this replaces my job. If I could do like that one very successful person is doing, and just identify that Wednesday at this time, it's go time, sit down and put the cell phone on mute, and just focus and take that one trade that I need, even just for the week or for the day or whatever it is. And then I'm free to live life with her. So she's really, really good about that. I'm thankful for her and for all the support that I've got. And I'm optimistic that this will lead somewhere pretty cool. So that's my yearly update. I am going to try to do better about even just doing a weekly, like an end of week. When I'm finalizing this, I think it would be a good thing. Just sit down and just go through the whole week, go through the AMDX things I'm struggling with, and at minimum do something like that, because it is pretty time consuming to do all the jawboning, as ICT says, and then do the recording and all the editing and writing up the details and everything. So, but it is one of those things that I think will pay off. So if for whatever reason anyone is still watching, I appreciate you joining my meandering thoughts, and I will see you in the new year, onwards and upwards.